Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, November 20th, 2019. What we're going to do is start out, look at the broad markets. We have some technical developments worth noting, so I want to point that out. Today was a little bit. Markets are waking up a little bit. What we had today is for the biggest intraday swing in QQQ in a while. You can see all these little candles right here for weeks now, since you had this breakout candle right there above the downtrend line here. That wasn't the breakout to all-time highs right there. You had it a little bit afterwards, but again, that was a downtrend line we took out. And since then, every candle's been small. This range intraday from high to low was about 1.4%. Nothing big, still pales in comparison to some of these candles, in over the last year or so. But again, it shows you right now things are starting to perk up. You also see the biggest volume bar and also the biggest red close that we've had in a while on QQQ, down 0.6%. So that happened, and let me show you what happened and what didn't happen. Another thing that I've been watching recently is the waiting for a bearish crossover on the PPO. Covered that in recent videos, right? And we have it today, but by such a small amount, a negative 0.01% reading on the PPO histogram. Excuse me, guys, it's been a long day. 0.1 reading is basically lines are crossed or pinching, we'll call it. Sometimes you have them kiss, they pinch, and then they bounce a little, but it's hard to argue is the momentum has been waning clearly, and that's what the PPO histogram, or if you don't have a PPO, use a MACD, put up the MACD histogram, and it'll show you something similar. Momentum wanes during a rally. You're going up, 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 but when you start losing momentum, I like what I call these hills, these clean separations. And if you're not familiar, all the green and red bars tell you there's a zero line in between. It's all about the PPO above that indicator. You have your PPO line here in orange and the signal line in white. When the orange line crosses down below the signal line, that's a bearish crossover. And when the orange line crosses above, that's a bullish crossover. And so I said these are not be-all, end-all. I don't use them as standalone buy and sell signals, but they do a pretty darn good job, especially when you're trending. You want to stay away when you're chopping around like this and you have a lot of whipsaws. But when you have these big clean hills, it means you're in a clear uptrend, or right here, a clean downtrend. And just as the bearish crossovers usually come with are followed by corrections, the bullish crossovers, and it works in reverse. When the momentum is waning on a correction, you're going to see a divergence here. You're going to see the histogram moving up against prices falling. That shows you the momentum is waning on a downtrend. Boom, you get a bullish crossover, and there's a rally. You have a rally, momentum wanes, you get a bearish crossover, boom, there's your corrections. You can measure it out. These are all about 5 to 8, 10, even, of course, last year was about a 20-something% drop. But these are all, by far, the biggest corrections of the year, and there's your crossover. So we have it there. However, a little more work to be done, because even if you're going to short QQQ or get out of your longs, if you're long looking for the next decent evidence of a sell signal, you're best to confirm with not only the other major indexes. You can look at them all. I don't bother with the Dow. It is some people trade it. It's only 30 stocks. The S&P 500's 500 different large cap stocks. So I like to just track the QQQ and SPY. Plus, you try to track too many indexes, you're gonna lose some. It's like holding water or sand in your hands. Some of it's gonna slip through the cracks. So regarding the indexes, I focus there. Earlier today, for members, I did do a video. I covered small, mid caps, and even micro caps. There's some interesting developments there on the micro cap ETF. But so where I was going with this, we don't have a crossover yet, but it's looking at this, there are no guarantees, but you can say with a high degree of confidence you're probably going to get one. When you see the waning momentum, these lower peaks, this is just a rally losing momentum. Then you get the crossover. Here's one losing momentum crossover, and again, you can do this on your own charting platform. Just put the crosshairs where you got the bullish crossovers, or a bearish, bullish or bearish, bullish to go long, or to confirm that help to confirm, as I always say, with other technical evidence. More importantly, trend line breaks, support level breaks, bearish candlesticks, things like that. So there it is. We're close on SPY, but not there yet. But based on the posture, in the momentum waning and the divergences, everything else, I think it's safe to say we'll probably get it soon. So there it is. But you want to give the benefit of the doubt to the current trend when it's been resilient like it has. The other things I'm watching, I'm not going to go over all sectors. I'm just really focused on the top 4 sectors in the S&P 500. Tech, XLK, that's the largest sector by far, also the largest in the NASDAQ 100. And there, although it looks like we're pending a bearish crossover on the PPO, we still have the divergence, same divergences that have been building now. We've had little divergences along the way that have played out for 9% correction, and all along the divergence has been building. So the potential is certainly there. Right now I'm just looking for near-term pullback trade, measuring about 3 to 4% on QQQ, somewhere in there, maybe 5, 6, and but the potential is there for a lot more if and when we start to get it. And we'll just have to assess the charts as they come. All right, so the point of this, I want to mention that XLK broke down, as did the other 4 sectors I'm watching. These are the largest 4, or I should say 3 of the 4. XLV, XLF, which actually printed a close, a nice doji red candle well below the trend line. So here's only one you have a clear breakdown on. In the video I did midday for subscribers, I mentioned that, and actually I posted this update here. Let me grab it for you. Okay, and I think this is important. So midday earlier today, I put the video out shortly after what was it, lunchtime, and said since that video was recorded at the time, the market was up. Everything was, or at least if it was down, it wasn't down much. We hadn't broken down, but did the video and we had a quick swoon down. I'll get to that in a second. We had a sharp move down in the market, probably charged up a lot of bears, but it didn't technically do much. I'm going to get to that in a second. I'm going to talk on that. But since the video was recorded, 3 of those top 4 sectors, XLK, XLF, that's tech, financials, and communications, all broke down below those respected trend lines off the October 3rd lows and are currently trading below, albeit by a relatively small margin. As such, solid daily candlestick closes below at least 3 of those 4 sectors will increase the odds that a correction started. But as of now, a little more work is needed to be done to firm up the case for another 3 to 4% correction in QQQ, or about 2.5 to 3.5 in SPY. Again, those are my preferred pullback targets now. Okay, let's take it through those 4 sectors real quick, one at a time, and then I also will jump over to an NQ chart and show you something else that might have told you not to jump the gun yet. Now these we could get followed through tomorrow, so let me just say it right now. Any more downside tomorrow, especially below today's lows, which I would put at above 50% odds, probably at this point probably above 60 easily. Trend strong, it's been resilient. They stepped in and bought the pullback today, but they still managed to close it down. Now look, this is, first of all, XLK. Yes, we closed below the trend line, but not by a wide margin. When you see a stock breakout or a breakdown, if it's a long side bullish setup, you want to see a clear break above and a close. In this case, you want to also see a clear down. Let me take this phone call. I'm going to pause the video 1 second. Okay, sorry for the, yeah, I paused it so you guys didn't have to hear all that. All right, so there it is. You'd ideally see it down, but it is a breakdown. But again, like I said, with the trend being so strong, you give it a little check mark. But if we have more downside tomorrow, and again, or this week, I think based on what I'm seeing now, there's a good shot of it. But again, you want to give the benefit of the doubt if you don't want to jump the gun, because we've had several pullbacks along the way. So that's it. I just want to point out that XLK managed to recover a good part of today's losses, but still closed down 0.63%, which is biggest down day in that for a while as well. So that's one of them. XLV healthcare stocks are still comfortably above their uptrend line, so no breakdown there. I mentioned that was the one that didn't break down on the top floor. XLF, that's a pretty solid breakdown. What I said in today's video earlier as I was doing it, well, normally I might short the financials, but you want to see they're only going to go so far without the rest of the broad market. Why? Because they're a component of the S&P 500, one of the top components, and this is not yesteryear's market. The market of today is defined by active or passively managed funds now constitute the bulk of the funds. When I started the business, back in the early 90s as an investment advisor, stockbroker, most mutual funds out there were actively managed funds. You had a stock picker manager or management team trying to beat the market, and then, yeah, as you guys know, it's been a huge proliferation of indexed funds in recent years. And so what that is, a two-way street. When you have money flows into everyone's 401ks and pension plans and even individual investors buying SPY and QQQ, it's pushing all those stocks up in that index and sectors regardless of their fundamental. Well, I shouldn't say regardless, but the inflows and outflows have a pretty heavy impact. And so therefore, my point is, yes, you can have financials correct with the markets continuing to new high, but they're probably only going to go so far is what I'm getting at there. So either way, sell signal there, but only one so far. Well, let's look at communications. Close. See, communications XLC broke down. This is about a better than a 10% weighting. Now, a couple things here on XLC. It's a relatively new ETF. It replaced the old telecom sector back last year in 2018. It used to be XLT, and they AT&T, Ma Bell, they're not what they used to be, so they started this new sector, got rid of telecom, but it's still one of the bigger sectors. And there's starting to be enough technicals to chart it now. When it's brand new, on any ETF or stock, and you don't have at least 6 months of trading history, you can't really apply technical analysis real well. But at this point, you can. You can see 1, 2, 3 attempts to get above 51.72. Broke out recently, and now it's back testing. So far, so good. It's also back testing the trend line. Just keep it very simple. The bullish scenarios come in after a breakout, have a back test, and then continue on. If you break much below today's lows, remember this was an intraday low. All that matters on a daily chart is how you close the day, and they closed it back above. But if we take out today's lows by a good amount, my guess is you're not going to recover them. No business being that we should snap back up today. You'll also have a failed breakout above that 51.72 level and a break of the downtrend line. So something to watch for right here. And again, this is one of the biggest sectors. Okay, now let's look at the stock futures. Like I like to do in the morning, before the market opens, get a heads up. This chart was screenshotted here at 8:11 a.m. So at a little over an hour before the market opens. And as I said here, here's a chart of NQ. It was still trading below that small wedge. If you recall yesterday's update, we had, I'll get to those in a second, one small wedge set up and then a secondary small wedge, as well as below the larger trend line off the early October lows, with breaks of each of these support levels below opening the door to a larger pullback. So as you can see from the arrows, again, this was this morning's charts. We'll zoom in nice and tight here. So the first support level right there that I have is 82.66, right? And so you get a break of that, you move down to the next one, the next one, next one. So this morning I said still trading below that wedge, which puts it in a near-term bearish technical posture. The divergences are still in place, or were at the time and still are now, but that's what you have to do. And so I view it as sort of a cascading effect. The way it works, if this one gets taken out, that opens the door to this one, and so on. Now, there is a lot of moving parts to trading, so this is what I want to talk about. I posted an update once that level was broken. It did break today, and as I often say, when you're trading, you want to use the candlesticks in line with the chart that you're trading off of or using for your analysis. So this NQ, the futures charts that I normally go update in the morning and throughout these videos, are usually 60-minute charts. And so I said at the time we had broken down. I'm going to zoom in a little for you here on this chart as well. So I said NQ has impulsively taken out that 82.66 support. However, the current 60-minute candlestick has not been finalized yet. That's the candlestick. It's still in play. As such, you need to look for either a 60-minute close solidly below 82.65. I was given 1 point for margin of error, or additional downside. If you were to start going, you get too close to that 60-minute period, you're not going to get the close. It's not going to shoot back up in the last minute or so. So that's what you would need. I said at that point, to open the door for a move down to this big 80, what I think, maybe it's not going to be that big a deal from when we get there, but I think it's an important level, that 8,200 level. So that was then, this is now. That chart was screenshotted at 1:12 p.m. Eastern time. And then what happened from there, and again, the takeaway here, if nothing else, is Don't jump the gun. Don't get excited. If you're not sure what I'm talking about, if you didn't trade today, here's what that rip looked like. This is QQQ on a 1-minute chart. This was today's price action. I zoom in right here. We opened up right here. We went up, and the market was trading right here, and then boom, this big drop right here. We dropped in just a matter of minutes. The Qs fell over 1%. Again, biggest drop in quite a while. Undoubtedly charged up a lot of bears, maybe got some people to short, but you don't jump the gun. The trend is still bullish, and going back to what I was just showing you, let's take a look now what happened from there. I'm going to zoom into that 60-minute chart of NQ, and there it was. This was that candle right here, this second candle that I just showed you, 1:12 p.m. I said you need to see that candle close below. Look what happened. We were all the way down here. We snapped right back up, and look where they parked it. You want to call it coincidence, you can call that, but that's my level right there, 82.66. The next candle, 60-minute candle, they tried to take it above again, but they closed it above that level, well above that level, and then we went up from there. So what happened is it was only a whipsaw signal if you jumped the gun on it. We broke that level. Again, I think it's probably going to go tomorrow, but I don't know. And unless it does, the way I see this, it's just they're stacked levels. It's that simple to me. When this one goes right here, if and when that goes, that opens a door for a move down here. So what happened today was a pretty good overshoot, but it was a momentum fueled overshoot. There was probably some news headline. It doesn't matter to me what the headlines are. I'm trading the charts. If you try to trade headlines and try to trade off Trump's tweets, good luck with that. Let me know how that works out. So I trade the charts. Whatever catalyst snapped that down, it snapped right back up like a rubber band, closed above there. So now we still to be continued. Same thing I've been saying the last few days. 82.66 needs to go. That opens the door for 8,200. Probably get a reaction off that level, and if not, that's one thing I'll be looking for. How does this happen if we do start walking our way down here? If we do hit my targets, what does it look like getting there? Do we kind of stair step down? Is it a quick one and done? If and when we get to this target range here, about 80.40, 80.50, all the way down to about 79.78, do we set up? Is there a near-term selling climax? Is there bullish divergence on any of the time frames, short-term, anything like that, 5-minute charts? So we'll see, because what I had mentioned to in the video earlier today, there's a lot of ways to do this. When I look at the big picture, which I never lose track of, I try to keep a focus on that. The same thing I've been saying for weeks and even months now, these divergences continue to build. I have not waffled off my longer term targets. Whether we go up another 5-10% or not, I still think that's where QQQ is likely headed over the next year or so. I can't tell you with certainty. My confidence will go a lot higher when I have some of my long-term trend indicators fire. So right now, that's where I think there's a good shot the market's going. But how do you trade it? Well, one thing you can do is I've laid out some near-term pullback targets. Right here is a target zone on QQQ. There's a little flagging action right here. I'll add to that. This is a 60-minute chart of QQQ. So there's a couple ways to trade this. Let's say we break down. Probably happen overnight. The market doesn't like to make it easy. That's why futures traders can get a jump start on a breakdown of this little flag. QQQ traders, if it doesn't happen before the after-hours session closes today, you'll have to wait till tomorrow, which may, if it happens, it could come on a gap down, is what I'm getting at. So let's just say that plays out and we start heading down here. And we're coming down to this target zone. And let me tell you this right now, bearishness will ramp up, both in the sentiment surveys and yourself as well. If you're bullish, you're going to start second guessing your bullishness right there. As if we see some big red, 1-2% down days getting there, and if you're short bullish, your confidence is going to go up. But how to trade that, whether to close out there or not, is up to you. At this point in time, with the strong price action, everything we've seen, that is my preferred target. I'm not looking for any more than that. However, I'm open to the possibility that, first of all, if we get these sell signals, we still haven't broken 8,200 on NQ or that 199.80 level I need to see broken on QQQ. Assuming that happens soon, and we start to move down, well, you can either set your buy to cover orders there and make a quick, what is it from where we're at now? Let's see, let's say that would be a quick 3.5 to about 4% from where we're at now. From the top, it'd be obviously a little more. Cover there, or you have another option. If you cover there and we reverse right off the bottom of that target zone, that would be the max target. You can cover and walk away with, whatever quick trade, especially if you're leveraged up. However, if you want to do this, as we start heading down there, and let's say we start approaching that 195.68 support there, I'm still leaning towards this one. I'm going to say it right now, about 194.39. So let's say you start to get there. Instead of covering right there, set a stop. Give it a little room to allow for a reaction, a bounce off that level, maybe even up here. If the market bounces and just rockets up from there and goes on to new highs, takes out your stop, then you gave back a little of the profits. However, by setting a stop and letting the position ride, let's say we break on through there, and then a couple things start to happen. At that point, we go much below 194.39. Several things are going to happen. You're going to have dropped back below the breakout. You look at QQQ right here. You have a breakout to new all-time highs right here. Here was your previous high. Hit a couple highs there, you broke out. So one thing is you'll have wiped out. That will then have proved to have been a failed breakout or false breakout. Maybe not the end of the world if it's relatively minor, but if you keep going, the more you go down, the higher the odds are that was it. That was a failed breakout, and then you could continue much lower. So that would happen. Another thing that would happen, these divergences would be confirmed that I've talked about here. You'll have clear crossovers, even though you had a slight cross today. But again, let's just say the lines are kissing now, and there's a few other indexes. So that will firm up the case here, and also reduce the chances that the market's going to burn through these divergences. Remember, I've been talking about them for quite a while, and I said, look, the thing about divergences, and I say this often, I still get the same comments on the YouTube channel and some questions on the site. I say this all the time. Divergences, whether they're positive or negative divergences, are not a sell signal or a buy signal, not even close. All they are is simply an indication that a trend reversal is likely. You need to couple divergences once they're recognized, and I like to see them confirmed with a lower high in the indicators for negative divergence. At that point, then I need a sell signal. Well, what's a sell signal? It comes in many forms. Everything I spent the beginning of this video talking about. In this case, it's not simply a breakdown below this trend line, because we've already, or a back test of the trend line. It's multiple things. It's a breakdown in the SPY, S&P 500, and most importantly, a breakdown in the market leading sectors, specifically technology, which has been everything, in this market for the last few years. So once you start seeing red candles, you can get any more downside tomorrow. Let's just say it's increasing the probability substantially if we take out these yesterday's low or today's lows, and especially if you close the day with a follow-through red candle, and that just puts you farther below the trend line here, and then ditto for those other indexes. Otherwise, right now you can view this as pretty much a close on support, and it just may be more of the same, and that means we just continue to walk up this trend line, or maybe we break it and move around, and then it's not valid anymore. Then I have to redraw it. But at this point, there's a lot of reactions, and again, I'm just using one of those several sectors as examples. So again, the divergences give me a heads up saying, look, it's a rally. For those who want to trade it and just keep buying dips until it stops working, great, more power to you. It's certainly worked in recent weeks. I'm not going to knock that. It's just not my type of trade. It's not what I feel. I don't like trying to pick up nickels in front of a steamroller. So I'm focused on other things. We like the natural gas trade, and that, this morning's post, the charts I'm watching, that was the futures, the S&P 500 futures. Oh, let me get to that before we even look at natural gas. There was S&P 500, same thing. I said ES has pulled back to the 3102 support, and that was this morning. You have this support zone. Here, let me zoom in for you. There it was. We pulled back to just above that support zone with these intersecting uptrend lines slightly below, and I said they need to be taken out to trigger a more downside. And I'm referring to this trend line right here and this longer term trend line. So, and you can see my arrows don't start till those are getting taken out, meaning you got to go down here and then break these to kind of start this process. That was then, this is now, that was over an hour before the market opened. This is what it looks like. What did we do today? I haven't touched these trend lines. I have not modified them. They're exact position they were this morning. This is not random coincidence. We came down, we kissed a perfect perfectly where these two intersect. So ES hit support. So again, the final takeaway, if you had the inclination when you had that big swoon down this morning on the 1 minute charts when the markets dropped, if you thought that was the beginning of a big correction and you shorted right here, well, guess what you did? You did the cardinal rule, sin, I should say, of technical analysis or trading. You shorted on a pullback to support. You do one of two things in trading. You either buy a pullback when you want to go long. You buy a pullback to support. You don't short. Or if you want to short, you wait until that support level breaks. So again, those were all the levels I gave you. And as I said, NQ, it's a little sneaky or a little tricky, but it's straightforward. And the same thing I always say: you broke it intra-period, but you snap back above there. And again, when you have such a resilient trend, these dip buyers have been stepping in despite the divergences building, the low volume, the VIX at lows. You have to give the benefit of the doubt. You need to see some pretty solid sell signals. Otherwise, you're going to keep jumping the gun and early. So the takeaways: pay attention to the time frame you're trading on, and even if you're an NQ trader or whatever you're trading, XYZ, you want to track the related securities that go along with it. So like I said, I don't go shorting the NQ if that's what I'm looking to do, unless SPY confirms, because I've seen this many times and I've talked about it many times. I've seen clear breakdowns on NQ or SPY or QQQ, and then the other index at the same time the Qs break down, SPY falls to support, and guess what? A lot of people trade ES and SPY. And so if those buyers step in and buy a pullback to support, and it looks like you had a breakdown, you did have a breakdown on NQ, well, that's where you get those whipsaw signals. So they're not as random as it sometimes might seem. It's just that you got to watch all this stuff, and that's why most traders use multiple monitors. I've got probably 4 dozen streaming charts going at any one time across multiple monitors, and these are the things you watch, and these are the things you look for and wait for. And I'm going to wrap it up here because these are the same levels I pointed out this morning, the same levels that we bounced off today. And if you want to keep it very easy, just pretty much a break at today's lows. Anytime tomorrow or later this week, we'll have taken out those levels because trend lines come in at higher and higher levels each day. And we already broke that level on NQ. So if those break, then you look for what happens at the next level. Pretty decent support here at 30.77 or 30.76. Chances are you get a reaction, but maybe not, because there's a lot of hot air right now in the market, and you have to decide how you want to trade it. I think that would be comparable to that 8,200 level on NQ I'm watching. So you want to see 30.76. We'll call it 30.75 to be safe on ES, and about 8,200 on NQ. If those break, and they break with conviction, we're probably going to go lower and hit those other targets. Otherwise, guys, it's more of the same. They're buying the dips, and this can go on for a lot longer than you might expect. All right, we'll wrap it up here and do another update tomorrow. This has been Randy Finney with Right Side of the Chart.